Hi traders, welcome to our first webinar in 2017. First of all, my compliments for the new year. I hope you had great weekend. I hope you had great holidays for this Christmas and the new year. But we're back in business. You know that money never sleeps, and it's time to make some profits starting from the year 2017. And today we'll talk about the topic of our webinar today is positioning for big profits before Friday's US non-farm payrolls. This week is not so plenty of main economic events, but there is one very important report that is always influencing the markets. And today we'll talk about monthly US non-farm payrolls. So one of the main tips of our conversation today is why the markets are always volatile on this report, why the US NFP is so important for the markets. We'll talk about fundamental reasons. We'll try to understand what are the expectations of the market nowadays, and we'll see the ranges of the forecast consensus about the figure, about the number of jobs created in December in the biggest economy in the world, in United States. We'll talk about one simple NFP trading strategy, how to use it, how to make profits, and we'll talk about fundamentals of such a trading strategy. Of course, we will see lots of technical charts of measure assets. We'll talk about the background before this report. So we'll see a midweek picture because we got Wednesday today, and we'll see how the markets are positioning before this report. And we'll talk about one more thing, Canadian employment, which comes out together with the NFP, and we'll talk how to trade on possible divergence and make profit in US dollar versus Canadian dollar. So getting started is we have to understand that US non-farm payrolls report is always important for US economy. All of the markets, stock markets, bond markets, commodities, and the forex market are watching this report very, very closely. And the reason why is just because the employment figures are always important for consumption, are always important for personal spending in the main economy of the world, and it's always important to understand where the prices will go. So you know that all of the central banks, they always care about their inflation. So they make their policy, the monetary policy, based on the figures of the inflation. So US NFP report is always so volatile, and the reason is because it's very important for the Federal Reserve, and it's showing the healthy growth of the economy. So it's showing the situation in the consumption, and it can influence the next Federal Reserve's move, whether are they going to hike or cut the rates. So those are briefly the main points of why the non-farm payrolls report is so important. And the volatility during such a report, it explains that lots of people are trying to position themselves before the next movement, the next trend, because the NFP report is confirming or denying the current situation. So in case if we'll see a good figures, it definitely will see the continuation of the US dollar trend on the upside, and all of the markets are watching very closely this report. So the volatility and the volume of trades is always very high because bulls are fighting with the bears during this NFP report, and that's the reason why we see the markets are so shaking. And you understand that the higher volatility gives you as a trader on forex market much possibilities to make profits. So let's take a look at the platform, and let's switch to the economic calendar, which is the rest of this week. And first of all, tonight, 9 p.m. Eastern European time, we'll see the minutes of Federal Open Market Committee. This will show us the details of the vote about the last rate hike, and all of the investors will try to find the answers. How many rate hikes can we expect this year? What will be the speed, and when will be the next of the next rate hike? So definitely very important report tonight. We have to take a look at this. What do we have tomorrow? We got some European data. We got services PMI from Britain economy. And take a look at this one. This would be very important. That will be very interesting report. ADP is as an agency and they sorry, they always show their own view of the national employment report. They always show that some kind of a prediction of what figures do we have to expect on the NFP on Friday. So lots of traders, they take a look at this ADP report, and the reason is just because they are trying to understand what figures can we expect on the next day of the very important NFP report. Of course, we have the ISM non-manufacturing index, but we see that all of the last figures are very strong, rather strong from the US economy. So we should not expect any changes in that trend. And looking at Friday, you can see here that despite lots of European data, all of the eyes of investors worldwide will be at the NFP report, non-farm employment change. Always together with this report, we see several additional figures like unemployment rate, which is also very important for the Federal Reserve to understand the health of US economy. Well, I see the private payrolls, the payrolls from private sector, and of course average earnings. Average earnings are also indicating very strong figures about what to expect from average Americans in the sense of consumption, in the sense of spendings. So, but still, this figure is always important, and you can see that every time we have some kind of a predictions, we have some kind of a forecasts based on lots of analysts all over the world, and lots of people are trying to predict the number which is going to come out of this report. You can see here that the average consensus forecast is at the level of 177,000 jobs created in December. What I would pay attention is also the previous value of this report. So we can see here that in November, the report showed us 178,000 of jobs created in November. But if you can take a look, if you've been watching those reports closely during last 6 or even 7 months, you will observe one interesting trend. Every time we had an NFP report coming out from US, we've been seeing the revisement. I mean, the previous value has been always revised and the direction was the same. It was on the upside. So I would pay attention to this figure as well. And in case if we'll see some kind of reading of this report came out with the figures in line with the expectations of the market, we should pay attention at the previous value. In case if they will revise it on the upside, it will show us that the employment is rather strong in US economy, and we should expect the rate hikes from Federal Reserve. Of course, we have to take a look at the unemployment rate. We see here that the expectation of the market is 4.7%. It's always the average forecast, but you can see that the previous value has been 4.6%. So we should expect, one of the expectations is to see this report below the expectation, and I suppose, I hope that that will trigger the further movement on the US dollar trend. So those are main figures we have to pay attention to. And also coming back to the NFP, which is the main figure in all of this bunch of reports, I will try to explain you that it's always a range. When we talk about the forecasts and when we talk about expectations, it's always the range. Whether it's going to be the expectations from Federal Reserve members, the Federal Open Market Committee members, or if we talk about stock markets or analysts all over the world, we always talk about the range. So it's usually, the range is usually in something like 40,000 jobs. So in case if we'll see figures above more than 20,000 jobs, say for example 197 or more, it definitely will show us very, very strong reading of this report, and we'll see the surge of US dollar. But in case if we'll see the report of 1,050 and below, 150 and below, sorry, is definitely we have to expect some kind of a bounce back of the US dollar trend, and this will cause not only movement in the currencies market, but commodities, stock markets, bond markets as well. So this is a very important report for all of the financial world, and all of the investors will keep eye on it. So the trading strategy is very simple. Some of traders, they are trying to get the forecasts of this report. Some of people are trying to position themselves before it, but some other traders, they are trying to see the figures first and then to see the market reaction about that figures. So my personal opinion is to wait and see what will be the reading of this report, what will be the official numbers came out, and to see the reaction of the market in the first 15 minutes in order to understand what is the direction to position ourselves and to make big profits. So as you can see, it's not that hard to understand. As you can see, it's very, very easy. The expectations are a bit high, let's be honest. It's just because the economy of the United States showed strong figures in the last 6 months. So lots of people are expecting for the continuation of that trend. Lots of people are expecting for the Federal Reserve to hike the interest rate 3 times in the next year. But in order to do that, they have to see strong figures. They have to see growing employment in the US. So the expectations are a bit high. I wouldn't be surprised in some kind of reading like 1060, 1055, 155 K in this report, but still those figures will be strong. And I suppose my personal opinion is that we didn't reach the most levels in the US dollar trend, and we have more room to go. Let's switch to the technical analysis. Let's take a look at some of the major assets, and let's try to see what the technical charts are showing us. And we'll start with the Euro US dollar, which is most traded, most popular pair. And we can see here hourly chart of this asset. Let's try to squeeze a bit, and we can see the downside movement after the rate hike in the December 14. If you would like to see the bigger picture, something like daily, weekly chart analysis, I recommend you to watch our previous webinars at the YouTube channel. We talked about bigger pictures, we talked about forecasts in the sense of time frames with much more than 1 hour, much more than intraday. So coming back to the hourly chart, let's try to understand what do we see here. We see a bounce back from the lows right after the Federal Reserve hike. We see some kind of retracement here. Sorry, and especially this retracement accelerated during December 29. Some people were trying to get the stop losses, and some people were trying to get and to touch the base where are big orders situated in the market. So you can see that this range, this tail in this candle shows us a strong selling volume during this hour. So those are definitely, this is the range of strong resistance for Euro US dollar. Now let's try to put a couple of indicators, and the first is simple moving average. Lots of people prefer different periods, but I like the 89. We can see here that the price is slightly above this simple moving average. So it means that we're somewhere in the range of average prices for the hourly chart. And in order to understand what is next, we have to see some bigger picture first, and we have to see a couple of different indicators more. Let's put here the MACD, which is the moving average of convergence and divergence indicator. Well, you know that it's rather slow, but it's showing us a bullish market here, despite the downside trend on the bigger picture of the Euro US dollar. So I wouldn't rush to get inside the market. I wouldn't buy Euro just because I don't want to stand against the trend. But still, we need to see what is going to be next. Actually, my personal prediction for the NFP for the next weeks after NFP is the continuation of the same trend. So I personally predict Euro US dollar to go down. But in order to do that, in order to start making that, in order to accelerate, we have to have some kind of a technical pattern. We have to have a background in order to continue the trend. What else? We should add the RSI, which is the Relative Strength Index, and this indicator is fast. I prefer the period of 13, and we should add one more level, which is 50, the middle of all of the range. So we can see here that we're closing to overbought territory, and this is showing us that we have to expect some kind of divergence, and we have to expect this divergence on the both indicators in order to start entering the markets in case if we want to short Euro US dollar. So this is the simple way to understand the levels of possible retracement of this pair. This is very easy to try to understand what are the levels in this chart to position yourself. So what should we add also is the horizontal line. We can see that this line is very strong in the sense of support. Several times the prices have tried to break through, but we do not see any clear closing except this one, just right after the retracement, or I would say a consolidation range has started to play. And in case if we'll talk about on the upside level, the upper range, it's definitely this one is definitely the higher closing price of the hourly chart, and it's somewhere around 1.058. So this is the range we're in, and of course we expect the price to bounce back a bit more, and those will be the levels to get inside the market to renew our shorts of euro US dollar. Let's add one more indicator, which is a trend indicator. It's a Bollinger Bands. We can see here, let's zoom. We can see a couple of closes of the hourly candles above the upper line of the Bollinger Bands. So that could signal us a possible further movement on this chart time frame that could cause possible movements on the upside. So in case if we are looking for the levels to get into the market to short the euro US dollar, it's definitely better to wait and see and wait for better prices. So assuming all said, we should wait for better signals from the technical analysis in order to get inside the market. You understand that if you want to go long, it's rather late to do it. So in case if you are long on this pair, of course you have to wait for a bounce back down, and those will be the levels for you to get into your longs. But I do not recommend you to do that, honestly. Of course, coming back to the fundamentals, I would say that this retracement, this range, consolidation range, if you will, it's based on two fundamental reasons. One, the first reason is the holidays. So people took profit from the shorts and just went to celebrate the holidays, to go outside their countries, to spend some money. And the second reason is just lots of bulls of US dollar. Lots of people who want to make profits on the downside movement of the euro US dollar are looking for better prices. So they have a position like wait and see. And the thing that they are expecting is, of course, the NFP report, which can influence several weeks of trend in the upcoming time. So let's get back to the euro US dollar and try to see a bit bigger picture in the 4 hours chart and in the sense of indicators. Well, we can see here that the first indicator, which is RSI, is going to oversold level, where we also will try to see good levels to short it. And we see that the RSI crossed the middle line, the 50% line, which could show a bull, temporary bulls market. We can see here that the MACD, which is a bit slower, is showing us possible reverse in this time frame. So definitely the same levels here. We got 1.0530 and we have 1.0580. So that will be the range for us to see the momentum of the price and to watch closely where are we going to short euro US dollar. What's next? Next is the dollar versus yen, the Japanese yen. It's the same time frame. We got 1 hour chart. We saw here retracement. We saw here try to touch the base, try to find a support. After this, we have seen a strong upside movement of more than 200 pips. So it's definitely the range. It's also the consolidation range. We can see here the green support line, which didn't hold, and it's been broken, it's been breached from the first attempt on the downside. So possibly this line could become some kind of a median, some kind of resistance line in the upcoming hours and even days. So but if we talk about dollar Japanese yen, again, coming back to the bigger pictures, you can take a look at the previous webinars recorded at the YouTube channel. You can ask Currency House to send you some kind of a reading material. We have a sample of the very deep report about the reasons why we suppose that this trend is going to continue, about the fundamentals. So we'll talk about inside day. Today we'll talk about shorter periods of time in the sense of time frames. So me personally, I use Ichimoku Cloud as an indicator for Japanese nominated assets. So let's try to see what is it showing us. In the last hours, we can see that it's been a bullish cloud, and we saw this attempt to get inside the cloud, which failed, and we saw an upside movement here. But after that, right after that, the price slipped down, and we even breached the cloud itself. And you can see here also one of the signals that is showing us that the span, the cloud reversed. So me personally, I will look for better levels to get into the trend to buy US dollar, Japanese yen, of course, and probably we will see those better levels in the upcoming days. So again, the calendar will be very important. Let's get back and see once again the FOMC minutes tonight. A lot of figures tomorrow, and one of the main important is ADP National Employment Report, the ISM Non-Manufacturing Index, and of course the NFP itself. So assuming the picture is almost the same, me personally, I predict the continuation of the same trend. I will look for good levels to get into the market, to stay long at US dollar, Japanese yen. Let's take a look at the 4 hours chart. We can see here that the price has had an attempt to break through the cloud but failed. So I wouldn't say that it's a strong buy signal yet, just because we see that the span, the cloud itself, turned negative, turned bearish. So before entering to the market, we have to, oh, I'm sorry, look, I have to take my words back. Take a look at this. When you scroll, when you squeeze the chart, you can see here that in a midterm perspective, looking at this time frame, you can see that the pattern, I mean the span, is bullish. It's bullish. It's reversed and reversed back again. So this could be a buy signal. But me personally, I would wait, and I think that the markets can give us better prices to get into the trend. Well, I would even open the daily chart to take a closer look. Well, you can see here that this day, let me zoom. Okay, this day had a strong buy signal. You see here that bears had an attempt to test the blue line, which is a June SAN, and it's always a support in the upside trend. It's always a strong support. So in case if they will try to test that line again, I would definitely consider next longs in the sense of midterm. Okay, and the level, yeah, the level is good. It's 116. So in case if they will try to get there, it's not a big movement, honestly, it's just 100 pips. We have almost 2 days before NFP report, so I think that they can even try to test this line before or even after the NFP report, and then we'll see the reversal, and after that we'll see the continuation of the trend. But again, it's just my personal view, and what I'm trying to do is just to position myself, because you always have to think about what would be your next step. So in case of the continuation of this retracement, possible retracement, because we don't see any signs of a deep retracement yet, but still, the next level of the dollar Japanese yen will be somewhere around here. So it will be something like 114 Japanese yen per US dollar. I mean the cloud, I mean the upside range of the span. So we always have to think on 2 steps ahead. We always have to plan our trades. What's next is the pound yen. Is also one of the most profitable assets during the last period of 6 months. We can see almost the same picture here. We can see some kind of an uncertainty on the hourly chart. So in case if you want to go long, I would recommend you to expect next steps, next signs, but one of them we already see here. Take a look at the 4 hours chart. The span had a bearish pattern for some period of time, so it showed us kind of a retracement. But if you can see here, the cross of the span is showing us that we turned bullish again. So the next confirmation has to be a clear closing price of the 4 hours chart above the span, and that would be the next confirmation, next step of the Ichimoku cloud to confirm that we're back on track, that we're back on the trend, and it would be good and strong signal to buy this asset. But before that, we definitely, until we are inside the span, it shows us some kind of uncertainty in this pair. Same here. This pair is not connected to the US dollar, but still is one of the risk appetite assets. So, of course, it depends on 2 components, the British pound versus US dollar and the dollar versus yen, but still it comes mostly together with the dollar yen. So I would consider longs, but again, we need to see a couple of things. We need to see clear signals from the technical analysis. Same picture on the 1 hour chart. It's too late to buy and it's too early to sell. That's what would I say. Let's get next, which is gold. Gold, same, we talked before about the daily charts and I wouldn't repeat that. Gold is trying to get a deep retracement. That's what I see here. Look, this is a consolidation range, and you see here that gold became bullish on 1 hour chart, and we do not see any clear confirmation of the continuation of this bullish trend. But coming back to the bigger pictures, I would recommend you to wait before it will give before the markets will give us better prices to get inside to join the trend. So I suppose that they can continue this retracement as we observed from the end of the year. So it's a bit early to get into the markets. And in case if you want to go long in the gold, well, you have to look at the daily chart first, and it's definitely a bullish market. It's definitely a very strong bullish market with this retracement here. So of course they probably will try to test the upper range of the Bollinger Bands, and you can see that this level of 1,177 US dollars per 1 ounce of gold looks attractive to continue the midterm downtrend. So I would recommend you to expect better prices. And you know, if you ask me why wouldn't I buy this asset in case if I predict this level, I will answer you. Look here. Look at this. We're in the upper range of this levels. It's too late to buy gold. Same here. We're in the upper side of the Bollinger Bands of this range. So they can reverse even from here. It's not a guarantee that they will get to that price. And so that's the reason why I'm not long. All right, let's take a look at Ichimoku with gold, a strange combination, right? But it works, and I showed it in my previous webinars, in my reading materials. We see a bullish span, so it's too early to sell. What do we see on 1 hour chart? It's bullish. We don't see any sign of the reversal, by the way. All of the lines are in order to continue the bullish levels. So it's a kind of confusing every time when you take a look at the daily chart, which is totally bearish. And if you look at the intraday charts, which are bullish, it's always confusing. So it's a period of uncertainty, and that's the reason why I prefer to stay out of the markets in that period. That's the reason why I prefer to see the next momentum, to see the next movements of the price, and to see clear signals on every 3 charts, just to understand what would be the next movement. So my prediction is for the price to try to test this span from the downside. Well, of course, the closing of today will be very important. Why? Because we are trying to get above the blue line, which is a support. Resistance yet, because we don't have any closing of the day above this line. So in case if we will see tonight a tail, you know what I mean, a closing price of the daily chart below the blue line, it will be definitely a strong signal to sell gold. But the second scenario is what they will try to make is try to move somewhere here to test the cloud, to try to get inside the cloud. And most probably that they will bounce back down from here and continue the bearish trend, you know what I mean? Okay, same picture with the silver. They always come together, but with the difference that silver is much more volatile. And let's quickly take a look at the daily Bollinger Bands. You see that there is a room to go on the upside, but still we don't see any clear confirmation that we're on the uptrend. So the same here, I would wait better prices to get inside the market. Let's take a look inside the day, 4 hours chart. Same. 1 hour chart is bullish. So I would wait for more clear signals from the technical analysis, and which is most important, I would wait for the economic report to clarify the next level. So quickly, calendar. If you can take a look at the Friday's calendar, you will see that exactly at the same time the Canadian government will have the report of employment change. And you have to see the difference between the economy of US and Canada. And you see that the prediction, the forecast is that the Canadian employment has changed into negative territory. So comparing to the US economy, which is making the growth of jobs, which is making sustainable growth of the employment figures, we can see that Canadian economy struggles to do the same. So my point is that in case if we'll see figures in the range of the NFP report from US, and at the same time if we'll see the Canadian employment change turned negative, that would cause a strong movement of the USDCAD, which is a very volatile pair. So I wouldn't be surprised of a 300 pips move just several hours after the report. So one of the strategies to trade on the NFP report is not just the US dollar versus some other pairs, but you can try to play, you can try to win on the divergence between US economy, which is strong, and Canadian economy, which is comparatively weak. So my point is that in case of bad figures from Canada, we'll see a surge of USDCAD and a huge movement in that pair. Technically USD Canadian, it's a daily chart with the Bollinger Bands, and you can see this green line as a support of the trend. So I would pay closely attention to this range, which is somewhere below 1.32, maybe even 1.3150, and those would be very good levels to enter into the market in case of the confirmation from the economic, from the fundamentals. So getting into such a trade would allow you to have in the midterm a huge profit of more than 500 pips, if you can see the chart here. So the target for USDCAD is above 136, and in case if the fundamentals will confirm everything, every prediction, we could see a huge spike on this pair. So that could be one of the strategies for you to trade. Inside day, we see bearish 1 hour, we'll see bearish 4 hours. You see the consecutive closing of prices below the downside range of the Bollinger Bands. So it's always indicating us that we can see better prices, we can see lower prices, and we can still get inside this midterm daily trend. So it's rather lots of, well, I should say we have plenty of opportunities this Friday, and the NFP report can cause huge movements, can cause continuation of the trend. So that will allow us to have profits during January, February, and so on. So I definitely recommend you not to miss the NFP report trading session, and this will be very important, very cautious for the markets to understand the next direction. So Assuming all said, I have to tell you about our Supreme Trader subscription. We had December pretty good, more than 1,400 pips of profits for clients based on the recommendations from our analysts reporting. And you can join now. You can join this exclusive list of traders. You can join current traders who are receiving weekly inside reports, who are receiving active webinars, trading live sessions, private calls, and trading signals. So if you want to do that, we have an offer for you to get a Supreme Trader subscription, which includes weekly deep analyst report about the previous week. So key events, technical analysis, lots of data from our analysts department, the most significant events for the upcoming week. So you will understand how to position yourself, you will understand what to expect, you will see the levels where you can enter into the markets or take profit in case if you have current open positions. We have in the same subscriptions weekly exclusive webinar covering fundamental and technical analysis of the hottest assets in the market. One weekly live news trading event coverage for maximum pip gain. Let me try to pay attention to this special thing that we will have the live trading session on Friday during the NFP report. It means that we'll start something like 20 minutes before the report itself, just to understand what are the technical backgrounds, what are the expectations, most of the fresh news. So we have to get prepared, we have to get ready for that trading huge event. We want to understand how to position ourselves before the huge movements and volatility. And we'll have live coverage of the report, live comments of the figures that we will see during this report, and we will see live comments on the price action, which will allow you to gain profits. Moreover, me personally, I'm going to trade on this session, and most probably I will try to get inside the markets right after the NFP report. So coming back to the subscription, of course we have daily trading signals, and those are just a part of our subscription because we want to bring you the whole understanding of the picture. All of the trading signals from us with the Supreme subscription will include the background. So you will see the explanation of the reasons why do we think that this signal or that direction is right. So the price for the subscription is $50 US per month, which is not that high, just because you can make that profit from one single trade and cover all of the monthly subscription. So please contact the email that you see on your screens to subscribe. Please contact the same email in case if you want to inquire. We got free reading materials for you to understand the levels, just like examples of what you can get in the sense of reading materials, in the sense of reports, analysts. You can inquire about the deposit bonus if you'd like to trade entering before non-farm payrolls. So good offer from Currency House. You can make you can have a deposit bonus. You can get inside the markets before the report or during the report itself in order to make huge profits. And in case if you buy the Supreme Trader subscription, or in case if you make the deposit before the NFP with Currency House, you will get the access to the live trading session during the NFP report on Friday, 20 minutes before the report itself. Thank you for being with us today, and let the profit be with you.